find the best candidates. And so every week I start thinking about what I want to talk to you all about. Like on Saturday, and I think about Sunday night. And this is what I came up with for today. And it's a really great way to find the strongest bulls in any market condition. And remember, our market conditions are high inflation. And I want to talk to you about dividend growth stocks. And there's a scanner for it. You can find this on many other free sites, but you can find the stocks that are raising their dividends. So what's a dividend, first off? Well, a dividend is the distribution of corporate profits to qualified shareholders as determined by the company's board of directors. So it's profit sharing. So there are many companies out there that pay really nice dividends. And what's cool is when companies lift their dividends, there's dividend growth. Dividends have accounted for 40% of the stock market returns since 1930 and 54% during decades where inflation is high. What does that mean? It means people are making more money on dividends on the proper stocks, and inflation is high. And guess what? Inflation is high, really high for us right now. And when inflation has been high, the stocks that have increased their dividends the most have outperformed the overall market. Dividend payments may help a stock's total return be less volatile. So if a company's lifting their dividends, they must be doing pretty well, right? So this is a sign, it's a place to look for potential bullish trades. Now there is a scanner in Tom's Tools. You can find this information. You can do your own research with other free sites. And this wizard has a ranking that looks at dividend growth and stock price movement and combines the two for total percent change, giving it a percent change ranking. So you come into the wizard, you click, I'm going to do this in a minute. You click there. I think it makes a lot of sense in this case to use S&P 500 stocks. Why? Well, those are the biggest 500 companies in the US. And if anybody's going to pay big dividends, it's going to be one of those companies or more. And then you hit search. So let's go into the ranker and let's look for some opportunities. Yeah, let's go searching. Let's go searching. I'm going to go into Tom's Tools. Zooming in a little bit here. Let's go to stocks, stock analysis. There's a dividends ranker in here as well that I won't cover, but check it out. It helps you find stocks with the biggest dividends and various other scanners. And then there's dividend growth. Let's click dividend growth. You want to know what all this stuff means? I'm not going to go through and teach the scanner. You can learn it by going to help. And there's a book on what's behind the scenes in this scanner. So go ahead and use that if you're compelled. And then I want to rank by bullishness of the stock price change, and dividend growth change. I'm going to go after S&P 500. I'm going to hit search. It's just about that simple. And then I take a look. Check. Hey, Gerardo, this is your risk reversal trade. Look who's on the top of the list here. NVIDIA. Baby. Has this stock had any trouble with bearishness? A little bit of a correction there. Great earnings. Boom. Paid a dividend there. Off to the races. So NVIDIA is heading higher heights. Good chance, good opportunity for a bullish credit spread. Okay, so it's got one past year dividend increase. The stock price has risen a lot, and this is the ranking, total percent change. That's a good candidate. Let's look at MSCI. Similar, strong resistance at 560. I would wait for the stock to get above these points. That's another good opportunity. Monolithic power systems. Obviously a nice bullish sideways pattern, but bullish up to this point here. Not tanking with the rest of the market sideways. Don't like that one as much. And there's Eli Lilly. Yeah, that's a bearish crosshair. I'd stay away from that one. But the dividends some of these are paying are phenomenal. Here's Apple. Yeah, I like Apple. I like all of these actually, but Apple is has some extra stuff going for it. It's in the tech sector. The whole tech sector is going up. NASDAQ is going up. NASDAQ's going up. Tech sector's leading the NASDAQ up. Apple's one of the stocks that's leading the NASDAQ up. up. Let's look at what it's paid. It's paying 23 cents and has increased the dividend each and every time, each and every quarter. So that is a really nice, maybe we'll lean on Apple. Let's look at some of these big dividend payments here. MSCI is paying $1.38. What? That's a lot. Let's look at MSCI. Look at that. $1.38. Those are the dividends in Thinkorswim. $1. This pays over $1, $1.25 plus. Now the stock's 560, so that percentage is not super high, but it's still paying a very nice, healthy dividend, and the stock just doesn't want to go below the 50-day average. It's in a bullish posture. All of these would be good candidates for credit spreads. So if you want to play with them, you could say, all right, I'm going to take, I don't know, let's just take the top 100 and replace them in my stock list, and then go to any number of searchers. You know, there's a lot of things you could do. If you like these companies, you know, it would make some sense to consider covered calls. Now, that would mean that you're a stock trader, but not necessarily. I'm not going to do one. I just want to show this to you. If you go to covered call, I'm going to go my stock list here. Now, you can do a covered call with stock, with leaps, or with calls. So the traditional covered call is with stock. All right. Some people like to replace the stock with long-term options called leaps, or you could even use shorter-term options instead. So if you like, and you can calculate the return on risk at the current closing price, or if you got assigned. So there's different things you can do there. Of course, help will help you with discerning all the different moving parts. So I like covered calls with stock. I don't really like covered calls. I don't trade stocks. I don't have any stocks. I use options. But you can say, well, let me do covered calls with shorter term calls. So instead of buying stock, you're going to buy a call option. And look at the top of the list here. So what this is going to do here, let's pull it up just so you can see it. There is a covered call where instead of buying the stock, you buy an in-the-money option at 285. So with the stock trading at 289, you're instead of the stock, which would cost you what 289 times 100, which would be 28,900, you're only going to spend 1,755 on the stock, and then you're going to get $11.80 by selling the out of the money call. This is called a diagonal spread, but another way to think of it is you're simply dropping your risk from, you know, your debit from $28,900 to $575. To me, this is much better than buying the stock, of course, and then you're left with that risk graph right there. So that is a covered call built with calls, cheaper calls, instead of buying the stock. So that's something you may want to play with.
Mike, can I ask you a question? I'm thinking that you started to look at covered calls here because of the potential of picking up the dividend. You get any dividend with an option?
Yeah, you don't get any dividend. So if you want to collect the dividend, this is how I originally came here. You can go ahead. Let's do the same trade on Microsoft if it comes up here. Let me find it. Yeah, so what I just showed you, which is a diagonal spread, carries with it a lot less risk. I'm not really concerned about the dividend, collecting the dividend, unless you want to do that. You'd have to spend $28,000 plus to buy the stock and sell a 290 call. That's a naked put. You could just as easily sell a 290 put and get the same risk graph. So that's the risk graph. The return on investment is going to be a whole lot less. So the dividend producing stocks, I'm about to show you put spreads. I'm not worried about the dividend. If you want to collect the dividend, you're going to have to spend a lot of money to do it. So what I wanted to do here was suggest that, there's a better way. So I'm forgoing the dividend payment in exchange for a whole lot less risk and margin and a gargantuanly high, is that a word? High return on investment, comparatively speaking. So, all right, hope that answered your question. Let's see, we got 9 minutes. Good. Slow it down, Mikey. Searchers, single strategy. You go after calls and puts, vertical spreads. We've been leaning on credit spreads here. So I'm going to go after my stock list. And let's just see what's there. Now we could go, I'm going to go short term and long term on these. Short term and see what's there. These are all rising and paying nice dividends. Target's on the list. Target, let's see what Target did. It's okay. What's Target doing today? Let's see. Now it's above the 50-day average. That's okay. If I did anything here, I'd sell at 156 down here, or maybe 158 beneath the 200-day moving average. That's a decent one, but maybe there's better. Starbucks. Yeah, let's look at Starbucks. So yeah, it's right above the 200, the 50-day average, and also above 104. Let's look at Starbucks. Yeah, similar to Target, it's hanging out there. I don't see a lot. I looked for news on these earlier. I didn't see any big news on these. Just checking real quick. So you always try to find positive news. Costco. So retail stocks went up. Costco, heck no, unless it's above the 200. All right, no, not on Costco. This doesn't seem to want to get above the 200. We don't want any resistance. If you're selling a put spread underneath, you don't want any resistance to stop the stock from heading to blue skies. You don't want to do that. Wait for the stock to close above the 200 before you even think about selling a put spread underneath. So there's some there. One that I think I do like is, let's check Avgo as well. What's Avgo? Yeah. Avigo. Yeah, this is a really nice chart. 640 resistance right there. Live. What's Avgo doing? Yeah, it seems to want to hang above 640, excuse me. 640 was support on Friday. So far today, that support level's holding. That could be a nice opportunity. And then there's Apple. Yeah, Apple is setting another high. 165 resistance. Lots of power here. Bullish cross. I'm liking Apple. There's a lot of them here. I don't think that the rest of them aren't good, but I like that Apple is on the run, and I'm about to buy some Apple equipment. I'm going to get Gerardo a MacBook Pro. So let's see, 162.50 on Apple. How about we go to 160? I'm going to check different prices here. I'd like to go to 160 is as close as I want to get. I don't want to get any closer than 160. I would prefer to go to 155 because that's mega strong support. So I'm looking at support levels. There's support at 155. That's the strongest level. 157 is really good as well. Resistance, support, resistance right there. 160 was resistance, that support. I wouldn't get any closer than 160, but I would prefer to drop to 157.50 or even 155. So I'm going to see what the live prices are here for Apple. Let's just see. Can we get what can we get for a 155 put spread? Right down here. Let's just see. Is there anything there? There isn't anything there for this week. All right. I don't think we're going to get a lot on Apple for this week. Oil was a different story because of the news. Let's try it here. Let's go out to a week from Friday, April the 14th, selling the 155. Yeah, 15 cents on $2.35 of risk. That's not enough money. We'll have to go higher. 23 cents, 25, let's call it 25 cents on $2 of risk. What's that? 12.5%, I believe, over 11 days. That could work. Let's check this out. I don't know the probability of profit though, so I want to figure that out right now.